Real estate unpacked.
Unpacked, that's right.
From defining your why to navigating the ins and outs of due diligence. We cover it all.
We did it. Good afternoon and welcome to Foundation of Profits, a podcast where we will go deeper into the real estate business with the help of expert companies such as Tantum Developers, your one-stop shop for real estate.
I'm Jake Thompson.
And I'm Sophia Martinez.
Okay, so you're diving into real estate, huh? Tell me more about this Tantum Developers company.
Yeah, it seems like, what is it, everyone and their cousin is talking property these days.
Right. But who has time to become like an overnight expert?
It can feel overwhelming, even for, seasoned investors.
Exactly. That's why we spoke with Tantum, who better than the experts to explain the why of their services. If you don't even know what you're aiming for, how do you know which path to take?
It's about aligning your real estate strategy with your personal objectives, right? Which is smart, efficient, like they contrasted wealth preservation versus passive income.
Oh, yeah, with that analogy, right?
Yeah, so wealth preservation, they said it was like that grand old oak tree, building strength over generations.
And passive income, they said it's more like planting an apple tree. Consistent returns year after year. I love that visual.
It's not just about the image, though, right? It reveals different investor mindsets.
Okay, I see what you mean.
So the oak tree, that resonates with someone who wants, long-term stability, a legacy play. But then the apple tree, well, that appeals to someone who wants more immediate, tangible results.
So knowing yourself determines whether you're planting for your grandkids or craving those like fresh-baked apple pies every autumn.
Exactly.
Now, what really caught my attention was when they were talking about tax efficiency.
Sure.
It's like the whispered promise of the real estate world, isn't it?
It's appealing, that's for sure. But it's about optimization, not evasion.
Right.
Real estate, it does offer, unique tax advantages, but it's not as simple as just buying a property and poof, your tax bill disappears.
We can't make it sound too easy.
Right.
But it is a good reminder that this isn't just about buying and selling houses. Like, there's a whole financial strategy layer to consider.
100%.
Yeah.
And speaking of strategy, they also mentioned fix and flips, which, let's be honest,
Oh, come on.
has that undeniable HGTV appeal.
It totally does. It's like you find that diamond in the rough, unleash your inner Joanna Gaines, and then boom, profit.
Well, and it does sound thrilling, but you got to remember those potential hidden costs. That's where due diligence is. Absolutely critical. You don't want to end up on a money pit renovation show.
No, you really don't. Which I'm sure has crossed the minds of every listener already. How do you actually find those incredible real estate deals?
Well, Tantum addressed that, and I appreciate their honesty. There's no one-size-fits-all answer. It depends on, so many factors, your goals, how much risk you want to take, even like your personal definition of a good deal.
So no secret handshake, no magical website.
Not quite. But there are key factors to, to consider.
Right.
Location, of course, is paramount. That old adage about location, 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 it still holds true, but it's more than just the address, right? It's schools, amenities, even like considering, future growth potential.
Especially for our listeners who are all about long-term strategy, maximizing their investments. They like to stay ahead of the curve. And speaking of calculations, they mentioned this 1% rule. What's the deal with that?
It's a quick way to kind of gauge the potential cash flow of a rental property. Ideally, the monthly rent should be at least 1% of the property's purchase price.
Okay.
So let's say a property costs $200,000. You'd want it to rent for at least $2,000 per month.
So like a quick mental math trick to see if the numbers even make sense. But it's not the be-all and end-all, right?
Exactly. It's a usable starting point, but it doesn't account for, all expenses, variations in different markets. It's essential to do your due diligence and understand all the costs involved.
Due diligence, music to a learner's ears. They'd rather be safe than sorry, especially when it comes to these like big investments.
Absolutely. And on the topic of investments, Tantum highlighted B-class apartment complexes as, well, they said potentially lucrative, but riskier.
Okay, break that down for me. What exactly makes them B-class?
Imagine a spectrum, right?
Okay.
You've got your shiny new A-class buildings with all the bells and whistles, and then you have your older, more rundown C-class properties. B-class, it falls somewhere in between. They often attract like middle-class renters who want comfortable living spaces, but without the premium price tag.
So the risk comes from?
Well, the fact that they're not brand new, right, means they might require more upkeep, renovations, ongoing maintenance, and the neighborhoods might not, appreciate as quickly as those with A-class properties. But with the right approach, renovations, good management, they can yield some impressive returns. It's about balancing that risk with the potential reward.
High risk, high reward, as they say. Okay, so we've talked about different investing objectives, the ever-important location, and even dipped our toes into the world of like rental property calculations. Where do we go from here?
Well, next we're going to shift gears from acquiring existing properties to the exciting and potentially daunting world of real estate development.
Okay, so we're talking about building from the ground up. That's a whole other ballgame.
It is. And while it might seem, intimidating, for that reason, Tantum developers explain the process to us in a way that is perfect for our learner audience.
Perfect. Let's dive into that. Now, I'll admit, when I hear development, I picture like skyscrapers and those, intricate miniature city models that architects use.
It does sound like stepping into a tycoon simulator.
Right.
But Tantum, they emphasize that even large-scale projects, they still start with those same fundamental principles that, that we've been talking about.
So even if I'm not building the next Burj Khalifa, the basics still apply.
Absolutely. And that's where their one-stop shop approach comes in. It's like they've taken all this complexity of development and just streamlined it into a process, which is, I think, incredibly valuable for anyone who's, maybe a little intimidated by this whole idea of building from scratch.
Okay, so for our listeners who are just dipping their toes into the development waters, what are the key elements of this, one-stop shop?
Well, first and foremost, they emphasize the importance of a really thorough feasibility study.
Okay, so what does that mean?
So this is where they analyze everything: market demand, zoning regulations, construction costs, potential risk, you name it.
Wow. Okay.
It's about, mitigating those risks before a single brick is even laid.
So it's like that classic saying, measure twice, cut once, but for real estate.
Exactly. A feasibility study, it's all about, minimizing those costly mistakes by making sure that the project, financially, makes sense from the very beginning. It's an investment in itself, but it can save you a world of headaches down the line.
Yeah, no kidding. It's like having an insurance policy for your whole project.
Right.
And speaking of having support, they also talk about the importance of building a really strong team. Right?
Yeah, absolutely. They highlight that you don't need to be an expert in every single aspect of real estate, right?
Of course not. Nobody is.
They have, specialists for every single step of the process, from architects and engineers to, marketing and sales professionals. It's about leveraging the expertise of others to maximize your chances of success.
Which makes total sense. Even in that HGTV world of fix and flips, you always see those savvy hosts calling in the plumbers, the electricians, the staging gurus. Nobody can do it all themselves.
Exactly. And Tantum, they actually connect their clients with this network of professionals. So it's, they've streamlined the process. They make sure that everyone's, working towards the same goal. It's like having a real estate dream team in your back pocket.
I love that.
Right.
Speaking of dream teams and ambitious projects, they gave this fascinating example of developing flex spaces, those adaptable commercial areas that we're seeing pop up everywhere these days.
Yes, and it's a perfect example, right? It's
yeah, it really is.
It illustrates how they blend that that practicality with strategic foresight.
Yeah, that's smart.
They even broke down potential costs versus profit for these flex spaces, which demonstrates their approach to this whole idea of calculated risk taking.
Concrete examples are everything. I'm sure our listeners are taking notes as we speak.
Right.
So we've gone from finding a diamond in the rough property to building something totally new. It's a lot to process.
It is. And while, Tantum developers, they offer this really comprehensive approach, I think what's really crucial for our listeners is it's understanding this underlying principle of due diligence.
Ah, our old friend due diligence.
Yeah.
We can't escape it, can we?
Mm-hmm.
It seems like no matter what area of real estate we're talking about, we always circle back to that.
It's the foundation, right? It's the foundation upon which, successful real estate ventures are built. Mm-hmm. Without it, you're essentially navigating blindfolded and, No one wants to do that with their hard-earned money on the line.
Absolutely not. So whether you're like buying your first rental property or, planning a large-scale development, due diligence it's non-negotiable. But tell me, what does that actually look like in practice? How do you do due diligence effectively?
That's a great question. And it's one that, we're going to delve into right after we hear from our sponsors.
Tantum, your one-stop shop for real estate. From idea to reality, we handle it all. Check out our services at tantumllc.com.
All right, so we're back and ready to tackle real estate development. Because knowing it's important is one thing, right?
Right.
But actually doing it effectively.
Right.
That's where things get a little murky maybe.
I agree. It's one of those terms that, gets thrown around a lot.
Totally.
But I always say, the devil's in the details.
Okay.
It's not just about checking boxes.
Right.
It's about approaching it almost like,
yeah,
like you're a detective investigating a case.
Ooh, I like that analogy.
Yeah.
So if I'm picturing myself metaphorical magnifying glass in hand,
Okay.
what kind of clues am I looking for during this real estate investigation?
Well, it varies, right? Depending on the type of property, your investment strategy. But there are some universal elements.
Okay.
First and foremost, you're examining the numbers.
Of course.
And I'm not just talking about the asking price.
Right, because as we've established, there's a lot more to a good deal than meets the eye.
Exactly. You're looking at comparable properties in the area. You're analyzing rental income potential versus, expenses like property taxes, insurance, potential maintenance costs, all of that.
So getting into the nitty-gritty of what it actually takes to own and operate that property.
Yes.
Not just the initial person.
100%. And this is where understanding, key metrics, like the cap rate or capitalization rate.
Yes, for those who might not be familiar.
Sure.
Would you mind breaking down what a cap rate is and why it matters?
Of course. So in the simplest terms, the cap rate is basically the rate of return that you can expect on a rental property based on its net operating income, right? So it helps you kind of assess the potential profitability of an investment.
Got it.
Yeah.
So a higher cap rate generally means a better potential return on investment.
Generally, yes.
Okay.
But it's important to remember that, a higher cap rate, oftentimes that also comes with higher risk.
Makes sense.
And vice versa. So it's all about finding that balance between potential reward and how much risk you're actually comfortable taking on.
Risk versus reward, the recurring theme.
Right.
It never ends.
It seems to be.
In real estate, it seems.
Yeah, pretty much.
But let's get back to our due diligence checklist.
Okay.
What else are we looking at besides just the numbers?
Right. So beyond just the financials, you're also you really want to dig into the physical condition of the property.
Okay.
So this might involve, actually hiring a professional inspector to assess the foundation, the roof, the electrical, the plumbing, all those, those crucial elements that can make or break your budget down the line.
Absolutely. So even if a property looks amazing in photos, don't skip that inspection.
Right.
It could uncover hidden problems that could turn into such costly headaches later on.
Absolutely. It's about, uncovering those potential problems early on.
Exactly.
Yep.
It's all about making informed decisions, which is what this show is all about.
Right.
Now, we've talked about the numbers, the actual physical property itself.
Right.
What about the less tangible aspects of due diligence?
That's where things get really interesting, right? This is where you're considering the location, but in depth, not just, is it close to schools, amenities, but crime rates, neighborhood trends, even are there future development plans?
Wow. So really understanding the the character and potential trajectory of a neighborhood.
Exactly.
Because a property exists within a larger context.
100%. And honestly, don't underestimate the power of just spending time in the neighborhood, talking to residents,
right,
getting a feel for the community vibe.
It's amazing what you can learn just from observing and having those conversations.
Oh, absolutely.
It's like old school boots on the ground research.
Yeah.
That's still so relevant, even in our digital age.
Right. Absolutely. And speaking of, human connection, one thing that I thought was really interesting that Tantum developers highlighted was this importance of, building a strong network in real estate.
So it's not just about the properties, it's about the people.
It's about the people. Real estate, yeah, it involves, bricks and mortar and all that.
Right.
But it really is a people business at its core.
Yeah.
Building those relationships with, experienced investors, contractors, real estate agents, lenders, even
Right.
it all contributes to your success.
Yeah. So this network, I guess, becomes like this invaluable resource providing, insights, guidance, maybe even those like off-market deals that you would never even know about.
Exactly. It's about surrounding yourself with, knowledgeable, trustworthy individuals.
Right.
Who can guide you, who can offer advice, who can even become partners
Yeah.
in your real estate endeavors.
I love it. Well, as we wrap up this deep dive,
Yeah.
it seems like the overarching message is like crystal clear.
What's that?
Knowledge is power.
Right.
But action, fueled by, thorough due diligence and a strong network,
Yeah.
that's what transforms that knowledge into like tangible success
100%. Yeah.
in real estate.
Couldn't have said it better myself.
I love it. Well, there you have it. Real estate unpacked.
Unpacked. That's right.
From defining your why to navigating the ins and outs of due diligence.
Absolutely.
We've covered it all
We did it.
with a little help, of course, from our friends at Tandem Developers.
The guide.
Remember, whether you're a seasoned investor or just starting out, real estate's a journey, not a sprint.
That's right.
So keep exploring, keep learning, and who knows, maybe one day we'll be featuring your success story right here
That's right. You could be our next guest.
on The Deep Dive. Until then, keep that real estate curiosity burning bright.
Keep learning, friends.